Hey guys, Steve here from theturtlefollower.com with the strategy session for Thursday, October 9th. I think today was one of those days where you were begging to have that bell ring. I know I was. So unfortunately, exactly what I said yesterday is exactly the opposite of what we got today. I really thought we were going to go ahead and push higher above the 50-day moving average and start with our resumption higher of the trend. At this point, this is probably as close to a bearish engulfing pattern as you can get. And the fact that it engulfed a 30-point move from yesterday pretty much signifies that, this was a little bit of a false move here yesterday. And now we're definitely breaking down. Trend is broken on the S&P 500. You could see weekly chart. We are right at the lower channel line of this linear regression channel. This is a 2-year weekly linear regression channel. All right, so you can see we're coming into that. We haven't been there in a long time. Last time we were even close to it was back in, let's see, we have one time back here in November 2012, and the last time was right here in February of this year. So we're pretty much as close. We're right on it. So not looking good as far as momentum to the upside. It's definitely the bears are in control here. And it looks like, in my opinion, we at least test 1900. I mean, that's just a given at this point. Another 17 points down. I don't see why we wouldn't. And if 1900 doesn't hold, then the next level that we're looking at to hold would be somewhere around, I would say, right around here. This 1868, 1870 being the high from this consolidation that really got us started. One other thing you can look at is a Fibonacci retracement. I don't really use these very often, and we've never used them here before, but a lot of times what happens is it retraces the move back to the 61.8. That hasn't happened. So the next Fibonacci level would be 1908. So that would be coinciding with this 1900 level. So just if you're looking at some areas that potentially you could pull back from and find some support, that you can use those Fibonacci's. But again, we don't really use them here. It's just another tool that you can take a look at. But like I said, S&P bearish engulfing as close as you can get to it. Not a good day. And the fact is, we pretty much bought at the open. We bought those 3 positions. They held up well for the most part. We'll go over those in a minute. But ultimately, they closed down on the day just with the move in the market. So we are going to be exiting a few positions. Again, we'll go over those in a couple minutes. Actually, I think only one position, Disney. We'll go over the portfolio real quick. The Nasdaq, okay, this one not as bad as the S&P, right? Still holding pretty much the levels from Tuesday, all right? So this is still holding in there, but with the weakness that we've seen the last week or so, we've only had a couple of days of upward momentum, or higher. Count 1, 2. Barely 3, 4, 5. 5 out of the last since the 19th, so almost 15 to 20 trading days. 5 of them have been positive, so not good as far as momentum wise. This one you can see has some room to the downside to touch that linear regression channel. So we'll see when that happens. And the last one, the Dow, again pretty close to a bearish engulfing pattern, meaning that you would be open higher and close lower than this body's candle, or this candle's body. Let's put that in the right order. This candle's body. So meaning that if we open, say, a little bit higher, say we opened like 16,931, and then we close where we closed, that would be a bearish engulfing. That would lead to more downside pressure. And again, 1, 2, 3, 4 out of the last 2 weeks, 4 days have been higher. So you could see, again, breaking down below this trend line. Next level that I see on the Dow, as crazy as it sounds, is 16,230. All right, that's the level I would think we would bounce, 16,200, say. So that's another 400 Dow points away. At this rate, it could happen in 3 days. So, to sum up the markets, they're not good. If you're long stocks, they're not helping you right now. We do try to obviously buy the strongest of the bunch, but when you have selling like today, it's so widespread. It's very difficult to make any headway. A lot of positions down. Costco was our only position that was down less than 1%. So that goes to show you how widespread the sell-off was, and how impactful that was as well. So let's take a look at the portfolio real quick. Let's see if we can get this bigger. All right. So here we are, 8 total positions open. All right, we just are continuing to rack up losses the last few weeks. So we are around $98,000 on the account. Maybe like 97.5 right now. I'd have to look. But so we're down about, I would say 106, about $9,000 in the last, 3 weeks? Yeah. Last 3 weeks, about $9,000. So, again, today didn't help the situation. Continue to try and follow the system. I mean, at the end of the day, it does get tough, but we know the system works. We know we're going to go through drawdowns. This just happens to be one of those times. I'd love to sit here and say that we always are pushing new highs, but ultimately that would be a lie. So for right now, we are in 8 positions. 2 of them are still green. That would be LUV and Apple, up 4.79 and 4.72%. Our biggest loser right now is Disney at 3.77, and you can see that our stop was hit. So we are exiting that trade tonight for almost a 1R loss. Again, these gaps down and once we've broken our trend lines, we've pretty much continued and not really given us an opportunity to exit the trade. You'll see here Disney is closed at $85 today. Our stop was $86.75. So another whole dollar of slippage, which is $200. And that $200 really leads to almost 0.25 R of a loss. So using closing prices has been difficult. We're going to continue to do it. That's just the way I like to trade. It allows me to go about my business during the day and really just evaluate the markets at night. But again, a $700 loss on Disney, 3.77%, 4.94 R. So maybe we'll get a gap up in the morning, take off our position. But as of right now, we're looking at about another 1R loss, which has been unfortunate because we've seen a lot of those. And depending on how long you're able to ride these stocks, eventually those 1R losses can add up, and you really need to get some good winners going, and we haven't been able to generate that right now. So as far as positions go, exiting Disney, we entered Costco. Our fill price was $128.41. We entered Home Depot. Fill price was $93.07, and we entered Kroger. Fill price $53.26. So you can see we are down in those stocks as well. And the other one that we did exit today was ADM, and we exited at $47.89, which was the opening price, and that was for a 2.6% win, $305.3 R. So again, it's nice to have a winner. We have to get the open positions to kind of turn themselves around. Right now we're looking at a open profit and loss of negative $124 with $300 or $3,200 in risk on the table. As you can see, our risk is way down at this point. We're less than 3% of the portfolio we're risking, so stops are tight. I just updated these yesterday, so everything is good to go as far as the model portfolio goes. All right, so the only bright spot we had in the market was Apple. Apple got upgraded this morning to, I think, the $115 price target. So right back in the middle of the range. You can see earnings coming up. Again, we're still waiting for either a break of 98 or a break of 103 to either exit or add to our position. Costco down 0.25. Unfortunately, this was one that we were looking really good. Now this looks like a reversal signal to me, but we entered at the open, so we have a little bit of a small profit on Costco. But you could see here, definitely would have been nice to have it go out at $130 versus where it did. We are setting our stop price. What I say, it was 120. Yeah, so 120 is right here. All right, so our stop price is all the way down here. Create alert. Last at or below. All right, so there's our stop price on Costco. So a lot of things have to happen for us to exit the trade. First, we have to break down from this consolidation that we're in. Second, we have to break this accelerated trend line. Then we have to break the 50-day moving average and ultimately the longer term trend line. So I kept this stop fairly wide. Position size is small. And as you can see, we are very far away from the stop, which with everything going on, it's the way we need to play it. RSG came right back into that downtrend line. Potentially could roll over at this point, close below 37.86, putting in a lower high and breaking this stop level. For right now, 37.86 is our stop. Home Depot down 1.08%. Again, at one point today, it was sitting nice. It was sitting 94.72. Looked like we were on our way. Looked like a nice follow-through continuation. That didn't happen. And now we're using this low here around $88 as our stop. And we're using 88 just because I felt 88.79 would have been a little bit too tight to where the 50-day moving average was. Wanted to give it a little bit more room, so I just made it a nice round $88 number. GD. Actually, we exited GD. That was the other day. Kroger. Okay, another one. Looked like we were continuing higher. This one is a little different, though. Look at what this is compared to what we saw on the market. All right, this is an inside day. All right, so from what we had yesterday to today, this body of this candle fits within the body of the previous candle. That's another form of consolidation. So when you're looking at Kroger on a relative basis, this is actually more bullish than something like the S&P 500, where it's the opposite configuration, where this bar engulfs the previous bar. All right, so this is another form of consolidation. So Kroger may be finding some buyers up here and may want to continue once the market decides to turn itself around, or if it decides to do it on its own. But for right now, we are using this $50 level. Again, we could not use 51.46 because we were above the 50-day moving average. So the next obvious support level was this small consolidation from back here and the nice round number of 50. Create alert. At or below. All right, this way we have those alerts in there. Expedia down 1.82%. Okay, this one potentially looks like it may be rounding over. Right now we're still waiting on a break of 82.51 to exit the trade, but for right now still in the middle of the consolidation, but starting to show some weakness. LUV, this one broke down on us again. So you can see here that we finally broke that 31.78 level. I thought about this more last night, and this is a similar situation to what I had in Alcoa, where the stock was very high in compared to the trend line. So we're going to actually keep this trend line here. All right, this trend line, and we're going to keep this stop. Hopefully we can come down, bounce, break this trend line, and move our stop higher. But for right now, unfortunately, the trend is not broken until we break this yellow line. And that means our stop has to stay down here at 29.39. But obviously the last few days have not been good for us. And again, this just shows you about how weak the market's been and how weak some of our stocks have been. Look at this: 1, 2, 3, 4, 5, 6, 7. 7 days where only one day closed higher than the open. All right, so 7 days. This one we opened higher, we sold off. So not a good situation, and definitely some widespread weakness in the market and definitely in our stocks. And finally, Disney. We will be exiting Disney, unfortunately. The mouse has to go, but you could see we broke the trend line. That was one of our first criteria. We also broke the 50-day moving average, and finally we broke these two support areas here. So again, this is one that looks like put in a lower consolidation, and potentially now, if you really wanted to, you could probably short it, putting a stop over 89.40. And eventually, once I have the e-courses and everything and the website set up with the new stuff, I'm going to launch a short selling e-course, and we'll kind of go over the criteria of what I look for when I short a stock, and different ways to do it, whether you do it with stock or with options. But for right now, definitely seeing a sell-off here, and we will be exiting tomorrow's open, so exiting Disney at the open tomorrow. There's really no reason to go through the watch list, only for the fact that some of these stocks just got, you could see down here, some of them got hammered, down 6% here. Alcoa down 4.23%. Look at this bullish or bearish engulfing pattern here. All right, so you want to short this stock, you're more than welcome to. Put your stop over 1633. See if it can, maybe continue on this downtrend line that's now in place. All right, so I had some good earnings. Those didn't help it today. Down 4.3%. NSC down 3.7%, coming right into trendline support. Kansas City Southern, again, down 3%. CenturyLink down 2.67%. Looks like it's starting to break down, breaking below the 50-day end trendline support. UMP down 2.5%. I mean, these are big moves, guys. Again, look at the watch list. This is a list of, I would say probably about 20 stocks, 25 stocks, and 1, 2, 3, 4, 5. Only 5 stocks on our watch list closed less than 1% down. All right, so that just tells you how widespread the selling is, how aggressive the selling is. So this isn't, not like a normal sell-off where things are being bought, and you could look probably in a lot of different areas and look at my watch lists here on the right. On the left. Out of everything, Apple is the only thing that's up. Look at the watch list that I have, that I sort through to get to our weekly watch list. 4. All right, so there's probably, let's see, scan, 79 stocks in that potential bullish watch list. Let me just make sure I'm scanning in the right thing. Potential bullish. Takes 480 stocks down to 61. All right, so now 61, and 4 of them are positive. All right, so again, just shows you the widespread selling that's in place and how aggressive it's been. So that's it for tonight, guys. Just keep yourselves aware of what's going on tomorrow. Again, don't try and be a hero. This is time for capital preservation. And the market will turn around at some point, and the wind will be at our back instead of at our face, and that's when we're gonna be able to recoup those gains and then some. So right now it's more about keeping your money. So don't try and go out there and do things that you're not sure how to do, or try and short stocks if you've never done it before, because I'll be honest, you could probably do it with almost anything at this point and make money, but you're not necessarily doing it the right way. So for right now, I think the best thing is, cash is a position, and that's one that we thought yesterday was one that we can take down a little bit, and obviously that was not the right play. But that remains to be seen as far as, maybe next week it's a different story, and we're pushing into new highs, and who knows. But for right now, market's down. Direction is down, trend is changing, and we're going to just have to adapt to it. All right, so have a great rest of the night, guys. Thanks for watching, and we'll see you on Saturday for the weekend update.